We talk about the red flag that we identified earlier on 2 weeks ago, a change of character, increasing of the supply. However, there's no follow through to the downside. Instead, we have a rally back up with normal volume and subsequently a breakout. Let me use this bar 1, bar 2, volume 1, volume 2. That's a relatively small spread candle. The volume behind is roughly about the same with bar 1. The progress to the upside is this much. That's quite a lot. If we want to quantify this, that's up 1%, 1.07%. Compared to bar 2, that's only up about 0.31. We only have about a third of the progress to the upside, while the volume is roughly about the same. That's the effort versus result. For effort 1 roughly equal to effort 2, but result 1 is a lot better than result 2, suggesting that there is supply coming in on bar 2. That's some form of the profit taking. People sell into strength during the breakout, which is quite normal. Next bar, a demand tail, a doji, that's not very, because when the supply come in on bar 2, what we want to confirm is some follow through to the downside. For example, some bearish engulfing bar coming back down and then have a reaction. But so far, there's no follow through to the downside, no confirmation. We only see bar 2 get some supply come in compared to bar 1, profit taking at bar 2, right at the resistance level, right at the all-time high level during the breakout. Next bar 3, got a demand tail, so demand come in. Bar 4, got a bearish bar, but volume-wise, that's a normal volume. I don't see any aggressive bear coming out, although there is some attempt to push a price down with this. Bar 1, profit taking bar. Bar 2, demand come in. Bar 3, that is a supply come in. Rejection tail showed up here. People want to sell into strength, taking profits. Bar 4, another doji. No follow through to the downside, but volume has been decreasing, suggesting that demand is getting exhausted and all we need is slight increase of the volume to have some momentum to kickstart a reaction. As long as this bar is not violated, this bullish bar, the level that we are watching is 6,400. As long as 6,400 is not violated, it still acts as a support. The S&P has all the right to retrace, come back, consolidate without violating the immediate upswing. You could still form another handle and then break out to go up to challenge new high. However, if we get a breakdown, commitment below 6,400, then likely this will become a trading range, bouncing up and down between this 6,500 to 6,240. There's a trading range that it could still stays on. But even with this happening, a trading range between 6,240 to about 6,500, this is still a well-established uptrend and with a consolidation. Most importantly, there are still plenty of the setups right at this moment. The only thing that I am watching out for is still, I want to see spike of the supply like this, and also bearish price spread, bearish candle show up. In case it happen, sometimes it could be very quick, like these 2 days. You only take 2 days to wipe out this whole period, more than a week. If you take into account this, then more than 3 weeks. It only take 2 days to completely wipe out again from the past 2 to 3 weeks. It could happen again. We need to watch out for spike of the supply similar to this, and also the price with a bearish candle like this. But so far, we're still waiting for the confirmation. Short-term wise, there is supply coming right at this segment, and there's indecision bar show up, and also need to monitor day by day. Immediate support 6,400.